here we are. As I was saying, here is showing little or none life. I have drawn these two trend lines, right? And as you can see, the ascendant one is much more longer than the descendant one, which is at some point favoring the upward continuation in this particular pair. But as we have been talking multiple times ever since, I don't know, last month or so, the pair has been pretty much trapped in range with 800 and 1460 ever since early 2015, right? We have a couple of spikes below, a couple of spikes above, and not much definition. So when we are talking about a bullish extension right now, we are talking about 14, 16, and maybe a couple of spikes. We have this 16, 15, which is this year high, and we have a 17, 17 something, yes, in the middle. But honestly, I'm not seeing it. I'm still not seeing how the euro can go back to 120, okay? Because of its own economic situation. There's no economic growth, as we were talking earlier. Inflation is subdued. So, what can actually support such rally? I don't know. Maybe a collapse in the U.S. economy and the decision of the Fed not only to remain on hold, but to even start considering back facilities, something that seems extremely unlikely at this point. Anyway, and from the technical point of view, there's clear neutral signs in the daily chart and in the short-term time also. This is the red one is a 20 simple moving average. This is a 200, and the blue is a 101. And if you take a look there all together, and directionless and indicators as also directionless around their midlines, meaning there is no clear technical signal in here telling me that the pair will go one way and another. But given that it was rejected from the trend line last Friday, right after surpassing it by a couple of pips, I would say that some follow through above set 113 could help the pair recover ground, in that case 1366 is my first target, right? And above that 14 and 1460 region, which for me is like a line in the sun. I don't think that buying the euro beyond this level is a good deal, And on the other hand, we have been holding about 112 for a couple of days already, ever since the past non-manufacturing ESM PMI in the US, which fueled the latest rally, right? So since then, a week already, the pair has been holding about that 112 level. So that should be the level to watch as a break below can take us firstly down to 1160 and then to the lows of seen last week around 1120. Honestly, I'm not seeing much downward potential below that level, but in that case, consider a probable test of the daily ascendant trend line we mentioned before, which for the upcoming days will be in between 1050 and 1060, okay?